Making money trading meme coins is absolutely easy. The only thing that you're supposed to figure out is number one, the best entries and exits, and also understanding the fairest price possible to obviously exit and enter a trade. In order for you to do this, right, you need to understand a few things about price action analysis. And this is what's going to differentiate you from the rest of the people, because a lot of people are using guesswork. A lot of people are guessing when to do things. But what I'm about to give you is the exact blueprint in order for you to be very successful. I go by the name of Muna, aka CryptoHype. I've been trading meme coins religiously for the past 1 year. I've been in cryptocurrency markets since 2016. I've been trading altcoins since 2016, and basically technical analysis is what I really enjoy doing. I really love technical analysis and the science behind it, the mathematics behind it, and this is what I'm about to teach you in today's episode. All right, so the first thing that you have to understand when we talk about price analysis and price action basically is it allows you to figure out support and resistance. And one thing that you have to understand when it comes to technical analysis is the market's actually made up of fractals. What are fractals? Basically, this is a repetition of smaller time frames to the larger time frames. In short, what I'm trying to say is whatever happens on the smaller time frame, it does get mirrored on the bigger time frame. So what you have to understand, especially when it comes to meme coin trading, is being very good at manipulating the smallest time frames, such as the 15 seconds, the 1 minute, okay, and also the 3 minutes. The reason these time frames are very crucial to your growth is due to the fact that most of the times, a lot of you people who are trenching on the markets on a daily basis, you are targeting meme coins that are freshly created. When a meme coin is only 1 hour old, you don't really have a lot of massive data to work with. And this is one of the reasons why the 3 minute, the 1 minute, and the 15 seconds are going to be your go-to time frames that are going to sort of allow you to make certain decisions. Of course, if you are dealing with meme coins that have been in existence for the past 3 months to about a year or even more than that time frame, right, you obviously have way much more data to go off of, and you can easily use that type of information to make informed decision. So when it comes to meme coin trading, the reason it's very risky is because you're using a very minimal time frame. For example, 3 minutes is going to be your highest time frame. Now imagine how how inaccurate that is going to be due to the fact that it's going to have a lot of false signals because there isn't a lot of good data, prolonged data to work off of. You get my point. And this is one of the reasons why support and resistance is easily destroyed by these different market conditions due to the fact that there's not really that solid time frame to stand the test of time. But anyway, I digress. Now that you understand this simple concept and you also understand the fact that that markets are made up of fractals, what you're going to do is you're going to look for clues, subtle clues in the smallest time frame to show a continuation of an uptrend. In order for you to jump into a meme coin, right, it has to exhibit certain criteria. Number one, the volume has to be on point. And this is one of the reasons why most of my filters, if you guys have been watching me religiously, right, I mostly concentrate on volume and community. Community is a representation of supply and demand. If you've got very good holder numbers, right? If you go on your stats, for example, let's kind of look at the few trending cryptocurrencies. By the way, I don't really know why I've been having very unstable connection with the servers. Maybe it's high time I tried switching servers. Maybe switching servers right over here because these servers are really disturbing me. Okay, so anyway, my point was most of these time frames, right? Most of these cryptocurrencies that are trending, they've got very good solid communities forming up. And this is one of the reasons why the holder amount is a very good one. So for example, this cryptocurrency has been trending for the past 11 hours, and as you can see, the holder count is around 1622. Okay, and this is one of the reasons why we're seeing it perform very well, because there apparently seems to be very good demand, and it was posted in Portion, Pastel, Shocked, and all these other very good alpha groups. So this is one of the reasons why volume coupled with a very good community that has got strong demand. So how are you going to be able to know that a meme coin has got strong demand? It's simple. You are going to go back to an increase in volume. So this is one of the reasons why, if you really want to get good at trading meme coins, you have to be a master of volume analysis. So when it comes to volume analysis, right, what type of indicators are you going to be relying on in order for you to figure out what the volume is doing? So you've got the VWAP. VWAP is one indicator that you can use. You also have a VRVP, volume range, volume profile indicator. VRVP. So if we go on TradingView, for instance, right, these indicators, you simply go to indicators and then take a look at these. I've got my personal favorites. So for example, VRVP, the visible range volume profile. This is a very, very good indicator that you're supposed to be using. And also the VWAP. If you understand how to manipulate these in conjunction with identifying support and resistance, then you guys are going to be very good. Okay, so support and resistance, okay, together with volume. By volume, all you have to figure out is the visible range, the volume profile, VWAP indicators. So what you need to do right after this episode, right, make sure you watch all the tutorials out there with regards to VWAP and VRVP. Okay, once you do that, you guys are going to be very good. So getting back to what we were talking about, right? How do you get to identify support and resistance? So support and resistance can be identified using order blocks. So an order block basically is the most important part of a trading session where the most amount of volume and trading occurred that led to an increase or decrease in price. So for example, if you are ranging in this particular level, right, it goes back up, it ranges, and all of a sudden something happens and it shoots up and creates another pattern. This right over here is an order block, which really matters because it's the price action that really brought change in the market ecosystem. You get my point? So this is one of the reasons why, if you go back to my trading view, I've got these white lines. These white lines are just simply, very good levels where a lot of trading data and action happen. And this is one of the reasons why you have these specific levels that are being respected. For example, you've got the white line right over here, and take a look at where the price bounced. After it had its huffing and puffing session, right, it eventually came back to this level. So if you knew that this level was a very important one, and moreover, we already know another important level, and this is one of the reasons why I've got this green line of support right over here, and sooner or later we're going to see the price come back to this level because we are seeing the order blocks right over here producing a lot of support. So this is one of the reasons why we are able to project where we can position ourselves. If you understand the order blocks, right, in terms of support and resistance, you'll be able to position yourself. The other key important tool when it comes to your trading arsenal is a little bit of Elliott wave. Now, Elliott wave is something that is very subjective. Okay, so what I usually like doing when teaching people how to use Elliott waves is understanding the fundamentals. So as you know, right, some of you already know, the market is made up of a few rules and a few ways to sort of it occurs in a few basic occurrences, if I can put it that way. You've got the first wave, the second wave, the third wave, the fourth wave, and the fifth wave. Okay, so you've got 1, 2, 3, 4, and obviously some other action, like 5. So you're made up of motive waves and corrective waves. So basically, if you've got a correction, that's a corrective wave, and then if you've got like an impulse move, that's a motive wave. So you've got these specific patterns that usually occur each and every time. And what I usually advise people to do when it comes to Elliott wave, because Elliott wave is so complex and it's a very subjective matter. What I advise people to do is figure out when a trend has come to an end and the beginning of a new trend. So how do you figure out that a specific trend is coming to an end? You look at the fourth wave. The fourth wave is very easy to identify. The fourth wave is the most confusing wave structure. Whenever you see the price being all over the place, it goes up, it comes back down, it goes below the support that was created, it wicks down, it breaks the previous resistance like that. Just know that you're dealing with the fourth wave. When you're dealing with the fourth wave, right, whatever you're doing, pay attention, because the market structure is about to have a continuation. Is going to continue, or is going to reverse. Now, this particular information is what is what differentiates the best traders from the worst traders. For example, if you know for a fact that the trend is about to continue, what would you do? You would obviously position yourself and buy in whatever particular direction. If you were shorting the markets and you know that the market is about to continue dropping down, you would obviously add more positions to your short. If you were expecting the price to push up, right, and you were long, you would obviously add more positions. But most of the times, a lot of people mess up due to the fact that they do not really understand when to understand that the price is either going to continue or reverse. If you are out of the markets like I have been, I already explained to you that I sold a lot of my coins. This is the fact that I was expecting a downtrend, right? If I know that the market is about to reverse and the downtrend has finished, right, it's easy for me to jump back in and just basically make a whole lot of money. So what you need to get good at is figure out when these market scenarios are going to come to fruition. This, ladies and gentlemen, is what's going to help you make a lot of money. Now that I've given you all this basic, all over the place type of explanation, how does this relate to meme coins? Because a lot of you have got like a very short attention span. Anyway, let's not talk about that. So, the reason why I was giving you this is everything that we talked about: Elliott wave, VWAP, visible range, volume profile, is going to occur when you're trading meme coins, especially freshly created meme coins. And you're going to have to analyze all these things, all these concepts that we've talked about on a small time frame. So when a meme coin is created, so let's take, for example, this one. Let's go to a smallest time frame. So let's look at a 3-minute time frame, because I'm assuming maybe you were trading this coin, right? And you figured that it was a good trade. So when this coin was created, it pushed from about 18,000 US dollars, pumped all the way to around 752. Then it had a correction. But before this happened, right, we had this particular level. When it was created, it hit a roadblock at 500,000 US dollars, and then it corrected all the way to 185, and then it continued. Once it established this level, right? By the way, this is what I was explaining to you as the most complicated wave structure to trade, the fourth wave, because it's always like all over the place. Okay, so once it did that, right, it again pushed up, went to close to $1 million US dollars, came back down, and then it just sort of started bouncing back and forth, and then eventually broke out. So what would you have done? How would you have positioned yourself in a very good way? Moreover, when this happened, right, the price was because these are 3 minute time frames. As you can see right over here, I'm on the 3 minute time frame. So this happened in a short period of time. 1, 2, 3, 4, 5, 6, 7. So 7 times 6, that was about less than 30 minutes upon release. You understand? So you should have made your decision, your informed decision, 30 minutes post creation of this meme coin. However, remember what we spoke about in the previous episodes, right? When trading, you have to use, the triple screen trading methodology. It's called triple screen trading methodology. Please do your due diligence when watching my episode, because I can't give you everything in one episode. So triple screen trading methodology, you've got the 3 minute, you've got the 1 minute, and you also have the 15 seconds. So the 3 minutes should be bullish, which is up. Okay, the 1 minute time frame should be in a downtrend, which is a corrective pattern, and the 15 second is supposed to be up. So your entry should have been on the 15 second time frame. So if you study the triple screen methodology, you guys are already going to know what I'm talking about, and this is going to be your overall structure in terms of finding an entry. So boom, getting back to our level right over here, we do see the 3 minute time frame going up. So if we flip to a smaller time frame, so imagine we were trading in this particular session right over here, because we do not have access to okay, let me say we were here because we do not really know the future and we can't really tell. So imagine this was 30 minutes after creation of this token and we don't have access to this other information. So remember, we're using the triple screen trading methodology. The 3 minutes is up, then we expect the 1 minute to have a downtrend. So you flip over to the 1 minute time frame and you go down. Okay, so let's scroll back down. So as the price action is happening, you're supposed to be sort of flipping the time frames so that you figure out what's happening. So boom, this is your 1 minute time frame downtrend. So you already have your specific level of target, and moreover, if you take a look at this, right, take a look at the red line. The red line is giving you the point of control. So when it comes to volume trading, you have to identify the point of control. The point of control is the red area. As you can see right over here, we had also significant trading action here. We had a little bit of a correction, then the price show up. So we already understand that there's an order block right around this particular level, and we also have a point of control. As you can see, the visible range is this indicator right over here. The biggest trading volume occurred here. So you know for a fact that if the price goes back to 158,000 US dollars or even close, so the price could have even slightly gone below, or it could have gone close. In this case, it went close to this level. So you already know this is going to be where you're going to be sort of having an entry or a very good fair value type of entry. So what you're supposed to do is, going back to our triple screen trading methodology, the 1 minute time frame is obviously going down. As you can see, we've got these bars 1, 2, 3, 4, 5. So you had about 5 minutes to make a decision, okay, whether you were going to get into this particular trade or not. So if you flip to the 15 seconds, so remember the 15 seconds is supposed to be up, as you can see right over here. 15 seconds is up, and yeah, so you flip over to the 15 seconds. Remember, right now I've actually switched from the 1 minute to the 15 seconds, and this is where we are. So let's retrace and go back to the beginning of the price chart. So we go back to the beginning and take a look at this. So in order for you to make an entry, you have to wait for the 15 seconds to resume its uptrend. So how do you see that the 15 seconds has resumed its uptrend? By taking a look at the change in the structure right over here. So here it was a consistent downtrend, and then it changed its structure and it started becoming bullish. So you could have entered around these levels. This was your entry. So in case you missed this level, right, this entry, if the price comes back down, it follows the order blocks right over here. So the order blocks are giving you very good support structure, and your second entry is right over here around 350, or you could have entered around 200,000 US dollars right over here. So these two, technically speaking, were the best fair value entry. Now take a look at this. So while you're still analyzing the markets, you have to understand whether the market holders are increasing and if the volume based on the VWAP is increasing. So if you know volume trading, you're going to be seeing the volume increase, and also you're going to see supply and demand increase. They're going to see the demand increase, which is going to be represented by the number of holders. And that, ladies and gentlemen, is how you perfect your entries. So if you entered between 200,000 to about 300,000 US dollars, take a look at how much money you'd have made. Right now, the current price is around 4 million. So if you entered at around these levels that I just indicated, using the blueprint that I just gave you, you could have easily made a 10x in less than 11 hours. 11 hours ago, you could have made a 10 to about 20x in a risk-free manner. Ladies and gentlemen, with my breakdown, if you really knew the principles that I talked about, where would you fail? How would you fail? How would this be difficult? So a lot of my students are reciprocating the results that I just showed you. A lot of these guys are minting a whole lot of money. And the reason why I'm saying a lot of these guys are making a lot of money trading, because I can see from the rewards that I'm having. On Axiom Pro, you've got rewards, and you can see the number of affiliates that you're having. A lot of these guys are actually putting in a lot of things. They're putting in a lot of, trades, and they're actually winning in order for them to sort of, provide the fees and whatnot. So I can see the back end of all my subscribers, my downline in terms of the rewards. So Axiom has got affiliates, and people who use my link, I'm able to see whether they are progressing due to the fact that the trading volume and the referral earnings are increasing. So I know what I'm talking about. So what you need to do is email me. Number one, you need to watch my course. Okay, so I created a very comprehensive course that really breaks down all the concepts that I talked to you guys about. If you guys are not lazy, every topic that I talked about, when I talked about the VWAP, just go on Google, understand everything about VWAP, VR, VP, volume range, volume profile, go on Google, research. You understand what I'm talking about. Entries, triple screen trading methodologies, you understand what I'm talking about. Trend continuation, trend reversals, Elo wave. You guys can easily do this by yourselves. But the thing is, with my course, everything is broken down in a very digestible manner that allows you to understand each and every bit in one space. My course only costs around $150. Now imagine you pay $150 and then you go out there in the trading world and make 500,000 US dollars. Isn't that a great trade-off? So to only the serious people that really want to make a lot of money in the next 6 months, you need to take action right now, and you need to buy my course. So in case you want to have access to my course, the link is going to be in the description, and it's also going to be in the comment section. It's going to be pinned. It's going to take you to nas.io. You're going to see, this is actually his course, and then just purchase it. It's going to cost you $150, and with that amount of knowledge, you're going to be able to make 500,000 US dollars in the next 6 months, guaranteed. Of course, not financial advice, but anyhow, regardless of that, you do not even need to take my course. All you got to do is put in that personal effort and research every topic that I talked about, and you guys are going to figure out that it does make sense and it does get easier. It is easy trading meme coins, believe you me.